The opinions expressed on this program represent the viewpoints of individual authors or contributors and do not necessarily reflect those of Troy University.
Hello and welcome to EconVersations. I'm your host, Dr. Manuel Sutter at the Johnson Center for Political Economy at Troy University. The Federal Reserve is a central bank and does not offer banking services to average Americans. Yet some people propose that the Federal Reserve should begin offering bank accounts for some Americans. And some presidential candidates have even mentioned the possibility of having the Postal Service offer bank accounts to Americans. These proposals both deal with financial inclusion and the existence of millions of unbanked Americans. What is financial inclusion, and why is this important for prosperity and the economic development of poor nations? And to what extent are America's unbanked a problem which public policy can address? Joining me on the conversations today is a new member of the Johnson Center, Dr. Scott Burns. Scott earned a PhD in economics from George Mason University and recently joined the Johnson Center in Troy University. Scott, welcome to Troy and welcome to EconVersations.
Well, thank you very much, Dan. It's good to be here for EconVersations and then just to be at Troy in general.
So before we get started, why don't you tell us a little bit about yourself?
So as you mentioned, I got my PhD from George Mason University in economics. And really the reason I wanted to pursue economics, when I was an undergraduate, I went to Louisiana State University, which a lot of people here at Troy remember fondly from their victory in football over LSU a couple years ago. But when I was a freshman, it was 2008, 2009, and the financial crisis was going on. So I really wanted to understand what went wrong in the economy. I initially went to college thinking I was going to go to law school, maybe do some journalism. So I was initially a poli-sci and mass comm guy. And because I really wanted to understand what was going on in the world that caused the financial crisis, I got really interested in monetary economics. And that kind of led me down this path where I am today, where I decided to change my major into economics, started reading everything I could get my hands on monetary economics in particular. And once I got to George Mason, at that point it was 2013, 2014, the financial crisis had largely subsided. But to me, one of the most interesting questions that we were studying was how some nations become rich and why other nations languish in poverty. And one of the things I started reading into was the important role that financial systems play in helping some nations escape poverty. And so that's why I kind of shifted my focus from looking at recessions and depressions and what causes them to more generally just what role money and banking systems play in helping economies become more prosperous.
So let's get into our topic for this day, the idea of financial inclusion. So what exactly what do we mean by financial inclusion? And then I used a term called unbanked or people who lack access to the banking system. So explain this for us to start.
So financial inclusion is simply the percentage of the population that has access to formal banking services. So access to having a savings account, just being a customer of a bank and having access to formal, so prudentially regulated banking services. That's what we mean by financial inclusion. When we talk about the unbanked, that's simply people who were not financially included, the percentage of the population, the ratio of the population who don't have any type of formal bank account, who largely deal in cash and other types of forms of finance that are outside the prudentially regulated sector of the economy and are not necessarily what we would traditionally think of as banks.
And if you don't have a bank account and you receive a check, I mean, then you might need to go to a place like a check cashing service.
Right, a payday lender or someone like that. And it's not that there's anything wrong with those institutions in and of themselves, but it certainly helps individuals if they have access to a banking account. If you can deposit that check that you earn at the end of every week or every month and start saving money and earning interest on those savings, that does play a very important role in helping you escape poverty and helping to expand your future. Not only because obviously earning interest on savings account means that there's more money in your bank account, but it's safer too. If you just have all your money in cash and you're just stowing it away under your mattress, it's a very risky way to go about living, just carrying around a bunch of cash with you. But if you have a bank account, not only are you earning money, but you're going to be a lot more secure. You're going to have a lot more options, and it's going to be a lot easier to take out a loan in the future if you have a paper trail that basically follows you so that you have a credit history.
So, and that gets into the issue of why is it so important for people to have access to the financial system, and that some of that would be, as you mentioned, to be able to borrow money if you want to, right?
Right.
And then it's also important that individuals be, for the economy as a whole, that individuals be connected to the financial system, because as you mentioned, when they put their money in a savings account in a bank, that money then thus becomes the rest of the economy can access that money as well, right?
Yeah. Then banks can use those savings that you have to invest in a variety of different things, whether it's making a loan to somebody in your community to buy a home, making a loan to a small business so that they can expand their operations and invest in new machinery, equipment, other types of technology. So it's really putting those savings to work, putting that money to work that benefits not only you, because you get interest on those savings, but also your community writ large.
And we saw an example of this back during the Great Depression, when people lost confidence. Many banks failed, and people lost confidence in the banks that remained. That they took their savings out of the banking system, and they were doing stuff like things like stuffing it in their mattress, and that meant that savings wasn't available as investment for the economy, right?
Right. That's kind of a good way of thinking about what an economy looks like when it's functioning properly. Is that when an economy and when a financial system is functioning properly, society's savings are transmitted into investments. They're intermediated by banks into investments. And what you saw during the Great Depression was a breakdown of that intermediation. It was still the case that people, even though there obviously was mass unemployment, things like that going on that were very negative, at least initially, people who were still earning an income were still able to save some money, but over time, because of the uncertainty in the economy and a variety of bad policies by the Federal Reserve at the time, and the federal government itself, caused the economy to go deeper and deeper into a hole. Banks were not lending. Banks were going out of business. They weren't lending. And so what that means is that even if you have people earning income and saving money, if those savings are not being intermediated into investments that allow businesses to take out loans and hire more workers, build new factories, then they're not doing much good for the economy. They're just sitting idle.
And economists working in the area of development economics are studying the process by which poor nations hopefully eventually become wealthier nations, have really discovered over the last several decades or so the very important role that financial institutions play in the whole development process, right?
Right. We've always known that having a good banking system is an important factor in economic growth and development. It makes sense. If you don't have institutions that can take people's savings and then lend them out to businesses to invest in new capital equipment, then obviously it's going to be tough to grow if you don't have that type of infrastructure in place. But over the past 50 years especially, there's been a lot of kind of quantitative work, a lot of different studies that have been done showing exactly how it is that banks contribute to economic growth. And a lot of it comes down to, if you have a well-functioning financial system, you're able to invest your money in banks. You as an individual, when you save, you probably don't know enough about different types of business projects and investments to allocate your savings in a very productive manner. But banks specialize in that type of knowledge. And that's the main function that a lot of this research says that banks play in promoting growth and development, is that they specialize in the types of knowledge about different investment opportunities. And they're able to figure out what the best investment opportunities are, who the entrepreneurs are with the best ideas. So that's a role not only for banks, but also in the stock market. And when we talk about things like venture capital, that's the role that they play. I think a lot of times there's a negative connotation with banking and investing writ large that they're just making money off of money. They're not adding anything productive. They're not building anything in a factory that I can touch. Therefore, they're not really adding anything to the economy. And that's not the case. When banks and the financial system at large is doing its job, what that means is that it's allocating your savings into investments that are productive, that are making the economy more productive. So that is a really important role, because it's something that you and I probably couldn't do too well if we had to allocate our own savings.
And in countries that are in the development process or struggling to become richer and currently poor, we certainly see a lack of financial inclusion. And this is particularly the case in Africa, although, as some of your other research has shown, over the last decade or so, there's been some pretty remarkable developments in Africa that have allowed for a lot of increase in financial inclusion.
Right. Yeah, Africa is a really interesting case study in what we're talking about, because if you went into a time machine and you didn't even travel too far back, if you just went back to the early and mid 2000s, most African nations, especially in sub-Saharan Africa, didn't have much of a formal financial system to speak of. The financial exclusion rate, so the percent of the population that was unbanked, that doesn't have any type of bank account, was somewhere usually in countries between 70% and 90%. So the vast majority of its citizens don't have any access to a bank. And then if you just kind of think about it from banks' perspectives, it doesn't make too much sense to invest in a bank in a very poor country, especially if the population is very dispersed. If you have to set up a brick and mortar bank out in the countryside where there's not that many people and there's not a whole bunch of wealth, so there's not many savings that are going to be deposited in your bank, it's tough to justify that business model. It's costly to build a bank. It's even more costly to operate it. And if you don't really have many savings that you can tap into to invest, and you don't have a lot of investment projects going on around you that are profitable, then it makes sense that there's not going to be that many banks in these kind of areas that are more remote.
But there's been some remarkable developments with what has been called like mobile money that have allowed millions of Africans to be able to to be included in their financial sectors, right?
Right. So the way to kind of think about this is that even though the old school model of banking, the kind of brick and mortar model where you actually build a physical branch in the countryside, that wasn't working too well because the economics of doing that just aren't that good in poorer nations. But what's really happened is that there's been a whole bunch of innovations, the most important one being the advent of the cell phone and the fact that if you go to sub-Saharan Africa today, even if you go to a very remote village, you might see people living in huts and in very poor conditions, but what's surprising is that a common denominator that you'll see in almost all these villages is that just about every adult has a cell phone. It's a pretty shocking thing to look at some of the visuals of people who probably don't have much more than a couple $1,000s a year in income that they're able to earn as farmers, but they're using cell phones just like the rest of us. And what that technology's kind of allowed to happen is that now if you're a bank or you're some type of financial institution or even a cell phone company, if you want to provide banking services to individuals in these remote poor regions, you don't actually have to build a bank branch and incur all the costs of doing that. What you can do instead is just use these cell phones and tap into those and allow people to access banking services remotely. And that's exactly what you've seen with the advent of mobile money.
And so that's a new form of in a sense, a new form of banking that was a lot less costly, and then have allowed financial institutions to actually serve people who previously they couldn't profitably attempt to serve.
Right. Traditionally, we might think of people having to go to the bank in order to become customers, but now with mobile money, the bank is kind of coming to you, is what's happening. Since most of the population, more than 95% of the population in even these remote regions in Africa have cell phones, banks no longer have to worry about establishing a physical presence where the people are. They can just tap into the existing technology, these cell phones, and bring really the full array of financial services to people. In the same way that here in the United States, we have things like Apple Pay and Venmo. A lot of people probably use these different payment apps, not just to send money to their friends, but also to deposit money. For the most part, I can't remember the last time, to be honest, I walked into a bank and deposited a check. Or even withdrew cash. For the most part, I'm able to do all this through my Chase mobile app on my phone. And even though in Africa people don't necessarily have smartphones, even the basic phones that they do have, they're able to deposit money. They're able to a lot of times withdraw cash from cell phone huts that are located around these villages and other types of stores that aren't traditional banks. And so it's pretty amazing to see that they have access to a lot of the same things that you and I have access to in a very rich developed nation, simply because they have these cell phones.
Now, it might be somewhat surprising then for Americans to learn that there are quite a few of our fellow citizens here in the United States who are currently excluded from the banking system, or unbanked.
Right.
Tell us a little bit about the extent of the unbanked or financially excluded here in the United States.
Yeah, the unbanked issue has become more prevalent over the past decade or so. The FDIC and some other local governing organizations have started to research why there are people who are still unbanked in the United States. It makes sense why there would be unbanked people in very poor nations for all the reasons that we just talked about, with it being difficult to reach customers that are in remote regions and who don't have much money. But in a rich nation like the United States, you might be surprised that about 7 to 10% of the population are technically unbanked. They don't have an account at a formal bank. And so a lot of that research has gone into figuring out why is it the case that the United States has a higher ratio of unbanked than a lot of other rich nations. If you compare us to nations like Canada or a lot of nations in Western Europe, France, Germany, the United Kingdom, the U.S.'s unbanked rate is a little bit higher than those nations. And so that's kind of been one of the key questions is why is that the case?
So what are some of the reasons that people in the United States are unbanked?
Well, there's been some surveys that have found some interesting results about why people are unbanked. And really, a lot of times, it doesn't have necessarily too much to do with the fact that people just can't access a bank, that there's banking deserts where people would have to travel 30, 40, 50 miles just to get to their nearest bank. For the most part, there's pretty good banking coverage in the United States. And especially with the technologies we've just talked about, the same thing that we talked about in Africa applies here. Most poor people or people who have income that's not above a certain threshold still have cell phones in the United States, which means that they can still access banking and financial services digitally, even if there's not a bank nearby where they live. But for the most part, if you look at the surveys, that's not what people are saying is preventing them from getting a banking account. A lot of times it has to do with things like privacy concerns, not wanting to hand over information, especially to government regulators. In some cases, it just has to do with a lack of trust in government more generally, not wanting to put money in a prudentially regulated bank for concerns that account is going to be surveyed. There's going to be some surveillance by the government on those accounts. But especially, there's a lot of people in the United States who are unbanked because they might work in what we call the underground economy. They might have a job that pays cash, and so they're not paying taxes, and therefore they don't want to have a bank account where there's a paper trail that the IRS could follow. Or maybe they're just dealing in things like the sale of illicit drugs, in which case you'd have to be a pretty dumb criminal to open up a bank account and leave a very strong paper trail documenting all of your transactions. So a lot of those people, for very obvious reasons, say, you know what, I'm not going to worry about having a bank account. I'm going to pretty much hold my wealth in cash or something.
And for some people, they also just simply wouldn't have that much money to put in a bank, and having a bank account can be relatively expensive. Right. There are some fees that are involved with having a bank account.
Right. There are some fees that are involved in starting up a bank account. Some of those are imposed by regulation, so that makes it more costly to try to access customers with lower income, and that is clearly a factor. But a lot of people in the United States, that wasn't really necessarily a heavily cited reason, not having enough money to justify opening an account, because the costs are fairly low relative to a lot of other things you might do in life. So it really is, for the most part, choices that people make where they decide that they would rather just go without formal banking services.
Well, for one reason, and then they do end up, if they do have a check, I mean, check cashing it charges relatively, what would seem to me as a relatively high fee, somewhere, I think I was doing some research, like 1 to 12% of the value of the check that you're having cashed. It seems like a relatively high fee, and I guess would suggest to some people, like, well, maybe it'd be better off if people had had access to the banking system, and the banks could do that for a lower price, right?
Yeah. That would certainly help increase people's options. So there are good arguments to be made for at least trying to find new innovative ways to reach people so that they don't have to rely on the payday lenders, and so that they aren't, in effect, paying very high interest rates for basic check cashing services and things like that. So that is, I think that the push to expand financial inclusion in the United States has good motives. I think that it is a good idea. The question really comes down more to how do we go about doing that? For the most part, we can agree on why it is the case that some people are unbanked. That's something that's not too controversial. It's the question of how do we fix it that's become a little bit more controversial.
Well, and speaking of fixing the problem, one of the suggestions that's been made is that the Postal Service, the U.S. Postal Service, could offer a bank accounts for individuals, right?
Right. So this is an idea that's kind of made a comeback over the past few years, especially in the current presidential election. There's been a few Democratic presidential candidates, Elizabeth Warren, Bernie Sanders, Kirsten Gillibrand, when she was in the race, really put forward this idea of postal banking, basically allowing the post office to offer basic banking services, especially catered to people who don't have formal bank accounts, so people that are unbanked. That's an idea that was actually tried in the United States. We had postal banking for most of the 1900s up until about the 1960s.
Tell us a little bit more about that, because I was surprised to actually hear that the Postal Service used to be in this business as well.
Right. So a lot of the candidates didn't mention the fact that postal banking had been tried in the United States before. So we've had it, like I said, from about 1900 or so until 1960. And early on, there were some people that took advantage of the fact that they could go to the post office and deposit and withdraw money and perform basic banking services. But really what you saw over time was that postal banking died a natural death. It kind of died out. People just voluntarily stopped using postal banking services because it turned out that it wasn't necessarily that convenient. And most importantly, people were getting a lot better interest rates and better services from banks than they were from the post office. With postal banking, your money's being invested really only in government treasuries, government debt that doesn't earn that high of a rate of return. And so the interest that people were getting on these postal banking deposits was very low relative to the interest they'd get from their savings accounts and checking accounts at banks. This was especially problematic in the late 1960s and then in the 1970s when you had really high inflation. If you're investing money at a postal bank, at the post office, and only earning 1 or 2% on those savings, whereas banks are offering 10, 12, 15% on savings so that you're keeping up with inflation, so that you're still getting a positive real rate of return. It's pretty obvious that you're going to take your money out of the post office if you have any there and try to put it in banks or any, maybe a mutual fund that tends to gain a higher rate of return. So that was one of the main factors. But for the most part, even though it seemed like a good idea at the beginning of the 1900s, people just really didn't demand these services too much. It didn't do a lot to lower unbanked rates. For the most part, private banks did a pretty good job of accessing people who previously did not have a bank account. And what we're seeing today is that it's not just private banks, but other types of companies that are doing a better job than I think postal banking would do if we brought it back today.
Another suggestion has been that perhaps that the Federal Reserve could offer bank accounts to individual Americans. Now, the Federal Reserve is a central bank, so tell us a little bit about what the Federal Reserve does, although as this banking system is called a banker's bank. Some of our viewers may not be completely familiar with exactly what the Federal Reserve does.
Right. So like you said, the Federal Reserve is the central bank of the United States. It conducts monetary policy, but what it also does is it basically serves as the government's bank and then a banker's bank. It's where banks keep their reserves, so it's where they keep their cash reserves, and it's also where the government deposits revenue that it brings in through taxes, and how the government, it basically conducts banking services for the federal government. Whenever the government's making payments to pay for various services, those are checks that are being written on the Federal Reserve. And so this recent proposal, what's called Fed accounts, allowing individuals to access the Federal Reserve just like banks and the federal government can, it's just kind of seen as another way to offer people a different option of accessing banking services. And it's kind of, it seems a little bit strange because when we think of the Federal Reserve, none of us have ever walked into a Federal Reserve branch and tried to deposit money. We don't have any history with trying to interact directly with the Fed. So it's definitely a very novel idea. But the idea that the innovators who are putting forward this theory, what they've basically said is, look, the Fed has all the technology at its disposal to act like a bank. And all it needs to do, the Fed doesn't even need to establish physical branches. It can just use the digital technology it has and create things like apps. And people could just digitally become customers of the Federal Reserve. And the Fed, it would basically operate a lot like postal banking. Customers would be paid interest on their deposits at the Fed. The Fed, for the most part, invests in treasuries, even though ever since the crisis, it's diversified its portfolio a little bit more with things like mortgage-backed securities. But for the most part, it's doing a lot of the same things that postal banking did back in the day. And so a lot of people are looking at that and saying, look, if banks keep reserves at the Fed and earn about 1 or 2% interest on those reserves held at the Federal Reserve, why shouldn't any other citizen be able to do that?
That would be, at least the Postal Service has a history of serving customers. I mean, this would be a completely new role for the Federal Reserve. They've never had like retail customers. They've attempted to have any ethos of customer service.
Exactly. Think about the problems that we mentioned earlier with postal banking. I think they all apply with maybe even greater force with this Fed accounts proposal. Because there is no history, because you and I have never walked into a Federal Reserve branch and deposited money, I think it'd be tough to get this proposal off the ground and running. Even if it was just downloading a Federal Reserve app on your phone and becoming a digital customer, I just think there'd be a lot of hesitation from people to do that. And then the same privacy concerns that we talked about a minute ago, especially if you're somebody who might work in the informal economy and you don't want your transactions monitored. It'd be a very strange decision if you're one of those people to decide to make the Federal Reserve your bank. And that is a huge chunk of the unbanked population, are these people in the informal economy. So again, if you're trying to bring down the unbanked rate from 6-7% down to something like 1%, like it is in Canada, I don't think that postal banking and Fed accounts are going to necessarily be a good way to do that, because a lot of the reason people are unbanked is because they don't necessarily trust banks, but especially government regulators and the government itself. And one of the interesting things I should note about these proposals is that a lot of times policymakers in the U.S. compare us to Canada and say, why can't we have financial inclusion rates of about 100%, so virtually no unbanked people like they do in Canada? Well, what's interesting is that they leave out the fact that Canada does not have this. Canada does not have something like Fed accounts where individuals can open accounts at the Central Bank of Canada, nor does it have postal banking. I don't think it ever has, actually. They've been able to achieve universal financial access just about in Canada. I mean, unbanked ratios of less than 1%, that's pretty dang low. Without any of these government interventions. And it's been largely because the private banking system in Canada has been very good. It does an excellent job of reaching people. A lot of Canadian banks have done a great job of integrating new technologies like cell phones and the internet to reach people who live in more remote regions. And Canada has a long history, quite frankly, of having a better banking system than we have in the United States. Less regulated, more competitive, more dynamic. So that's why Canada's unbanked rates are so low, in large part, and why the U.S.'s are so high.
And one thing that could help maybe bring some people into the banking system would be innovation, because there are some costs, and those are those are real costs of maintaining an account for somebody, even if it's got only just a few dollars in it, or they only write occasional checks. There are some real costs there, and so if we could bring down, if there are ways you could bring down those costs, that could be one way to extend inclusion, right?
Absolutely. I think this is going to be the future of financial inclusion moving forward, is that I think there's some business models that are better equipped to meet the needs of low-income customers, especially people who live in the countryside and more remote regions. And one example that we can talk about real quick are companies like Amazon or even Facebook, who are trying to get into the financial sector and offer basic banking services that are geared towards people who are unbanked. Kind of like the example we used with Africa. It makes sense why banks wouldn't have physical branches in remote regions of Africa. It'd be very costly to do that, and there's not many savings to tap into there. That's why it made sense for something that wasn't a bank, telecom companies, cell phone companies, to offer basic banking services, because they did have universal access and that technology. I think similar things can be said about things like Amazon and Facebook. Even people who don't have bank accounts, they very likely use the internet, use something like Amazon, or maybe they have a Facebook account, and it might be easier for them to decide to use those rather than going to a old school traditional bank in order to get financial services. And so that's why you're seeing Amazon basically saying, look, we're going to take the same technology that we're hoping to use to deliver packages to you, drones and things like that, we're going to use that to help bring the bank to your home, so that you literally don't have to leave your doorstep in order to get basic banking services, to deposit cash, to withdraw money, to establish a credit history. So I think that's the future of financial inclusion.
So you could have similar to an ATM, but just like the drone bringing you your cash.
Yeah, it could be a drone. It could be a variety of things. It might all be digital, but I like the fact that we have new and innovative ways of solving these problems, because the old methods, whether it's postal banking or even things like Fed accounts, I don't think are well equipped.
And just in conclusion there, I mean, it's just, to some extent, they're just kind of, some of those proposals would be a way of shifting the cost, or not make people pay for those accounts.
Shifting the cost so that taxpayers don't have to bear the burden as they would with postal banking accounts, but also just shifting to a business model that I think is lower cost. I think it's easier and less costly for companies like Amazon to access some of these people than it might be for an old school traditional bank.
Well, thanks very much for coming on and talk about this, and thanks for joining us. Join us again next time for another EconVersations.